Hello and welcome to Moneylife. This is Sucheta Dalal. This week, we're obviously going to talk about the stock that's in the news, which is Zee TV. So, after 2 years, Sony Pictures Network India, now called Culver Max Entertainment, has finally said the end, like in a movie, on its merger with Zee Entertainment Enterprises. Zee, as you know, all of you watch television. So this merger was announced, if you remember, on 22nd December 2021. And Sony almost came in like a white knight to save Zee from a very difficult situation when its largest foreign institutional investor decided to not only exit, but before that demanded an extraordinary general meeting where it said it did not want Punit Goenka to be the managing director. He, as you would know, is the son of the Zee Group's founder, Subhash Goel. He has different surnames at different times. And they wanted two other directors also to resign. Now, you would have read about this yesterday. You would have seen it on television because the stock crashed 32% after Sony pulled the plug on this planned marriage, right? So there's high drama. And what I want to talk about, or rather focus on this time, is what did mutual funds do? So those of you who think mutual fund investments sahi hai, let me tell you that while foreign investors dumped their holding in anticipation of continued problems and a possible breakup, Indian mutual funds are stocking up on this stock, which has been going down steadily from a one-time high of 600 in the last 3 years down to what it was yesterday, which is a little over 100 after having touched a circuit and collapsed 33%. So when the merger was officially terminated, this is on the 23rd, domestic institutional investors held a staggering 43.42% of the equity. How much do the promoters hold? 3.99%. So who are the real owners? Domestic investors and retail investors. But I'm going to give you the numbers. Mutual funds have been persistent buyers through these 2 years when there was one controversy after another in not only the merger situation, but also investigations by the market regulator into Zee and to other companies in the group, action taken by it, appeals to SAT, litigation with a foreign institutional investor, bankruptcy proceedings initiated by two of the lenders, IDBI Bank and JC Flowers. But our mutual funds weren't worried. They were buying, stocking up more and more. So let's start with September 2021 when Zee made headlines because Invesco Developing Market Funds, which held an 18.4% stake and had actually increased its stake over time, raised governance concerns. So I told you already, dramatic demand for an EGM, removal of Punit Goenka, and two other directors, Ashok Kurian and Manish Chokhani. These two directors, incidentally, resigned immediately after there was such a demand and didn't bother to fight it out. Now look at how different groups behave. Here's a table that I want you to look at and look carefully at the numbers. We're keeping it on the screen. You will see that domestic mutual funds who now dominate the Indian market, they have pooled the investment and savings of ordinary investors because of this big mega campaign blessed by the regulator and done jointly that mutual funds sahi hai. Doesn't matter what they do. And we repeatedly say individual schemes and their management is different, as you will see over here. So mutual funds increased their combined holding from just under 16% in September 2021, when the controversy started, to 43.42% in December 2023. That's just before Jan, when the merger has been called off. Who are the biggest investors? At the end of December, ICICI Prudential Value Discovery Fund had emerged as a significant supporter of Zee stock. Value Discovery. This is a value that's going down, like I said, from 600, right? It first acquired a substantial stake of 6.44% in December 2022 and is now holding 7.25. So This really means that when Invesco was dumping large stock, who was buying it? ICICI Prudential Value Discovery Fund. The second biggest, HDFC Mid Cap Opportunities Fund, picked up 4.61% in Zee as recently as June 2023, by which time people really had doubts about whether the merger was happening, didn't concern the mutual fund. It then went on to raise its holding to 5.26% by December 2023. Nippon Life Multicap Fund had just under 3% in March 2022, has steadily increased its holdings since then. Do they know something that others don't? Well, in Jan, it looked like they didn't know much, but they're not alone. Life Insurance Corporation has held on to the shares. Come what may, they are with Zee. So they held 4.89% in 2021, and marginally increased it to 5.12% to show rock solid support for the stock. Several other funds sold their entire holding, but other recent buyers, small amounts as you would see from the table, HDFC Value Fund, Kotak Equity Arbitrage Fund, SBI Life Insurance, Tata Large and Mid Cap Fund, right? Now let's look at what foreign institutional investors are doing. Now, I'm not saying FIIs are smarter, but look at the way the stock has moved. If it's steadily going down from 600, the FIIs got away or got out, but there's still time. So the contrast is FIIs were bigger supporters of Zee when things were hunky-dory. They held a combined 64.15% stake in September 2021. Their stake dropped to 35% by September 2023 when things were hotting up, looking more controversial. SEBI orders had come out. There was a reference to Competition Commission. They have dropped further to 28.19 in December 2023. Invesco had over 18.5%, first dumped 7.74% in June 2022, and then exited entirely, despite the surge at various times when there were seemingly positive announcements. Those of you who want to read it, we have written many columns on Zee. We are showing you links here. Please go to Moneylife, our main website, and you could read a lot more if you want more details. Now, many others have trimmed their investment or exited the stock. Retail investors, mind you, are gung-ho because they believe what they see on social media and on television. And this is a television company. So the combined stake had dipped, total retail stake, from 22% to 18% in September 2023. It's again shot up to 24.25% in December 2023. Again, we don't know what retail investors thought they knew or whether they were just following what Indian mutual funds were doing. Let's look at the circumstances in which each stakeholder stands, given the circumstances in which this merger has collapsed. Sony Pictures' faith in Zee promoters was always surprising to people like us, but it was a nice bouquet of television channels to buy. So they were obviously willing to ignore all controversy, willing to have Puneet Goenka as MD, and they saw an opportunity, despite the nasty fight with Invesco. The deal appeared shaky months before it was officially terminated, with Sony Pictures, if you know, in Jan, has demanded 90 million for breach of the merger cooperation agreement. This has gone into arbitration at Singapore. Zee has denied the charge. Most things with Zee go into litigation, so there'll be an arbitration in Singapore. We believe there's another letter written by the founder Subhash Chandra to the finance minister. So lots of drama. Picture abhi baki hai. You're going to keep seeing things. Initial reports suggest that the deal collapsed because of Zee's insistence that Puneet Goenka should manage the company. I think Sony started getting cold feet about it. So what will they do now? Zee has two options: find another white knight, find another Sony. So the company is already facing a cash crunch. So this is a fairly desperate situation. In fact, in Jan this year, it failed to pay an installment of 200 million to Walt Disney for television rights to cricket matches. Cricket crazy company, they had the rights, they couldn't pay. In October 2022, they had agreed to shed certain businesses under orders from the Competition Commission of India because Zee and Sony would have been almost a monopoly. And CCI said, we will give permission for the merger if they agree to do this. All that is now in limbo. The group also owes money to several institutions who had bailed out the company at various times. IDBI has gone to the bankruptcy court. JC Flowers has probably merged. This also had gone to NCLT. So where does Zee go from here? Given the past record of Subhash Chandra, he invariably has managed to extricate himself from a tight spot and bounce back. So maybe mutual funds are betting on that. Maybe retail investors are betting on that. The founders have, to their credit, retained viewer interest in their television channel. So that still remains a great deal. Doesn't matter their financial misadventures, their investment in unrelated businesses such as infrastructure, and frequent allegations of siphoning money. But thanks to these troubles, thanks to the fact that they owed a lot of money, they've had to reduce their own holding consistently till they're down to 4%, which means their hold on management is very tenuous, and any new white knight who comes in may want to be in charge. A corporate lawyer says the way forward would be to find a large group which is interested in television. He reminds us that two big players have been making acquisitions. One is the Mukesh Ambani group, the other is the Adani group. Adanis have taken over NDTV and others. Mukesh Ambani owns half the media. We also know in 2021 that Mukesh Ambani's group was previously interested in Zee. There were talks, but they fell through because apparently the Ambanis don't like to do a hostile takeover. They were actually even willing to have Mr. Goenka as the managing director. We don't know if that will still be true if they come in now, because Zee's stake is 4%. And the situation is vastly different. What else has happened is two orders by the Securities and Exchange Board of India. They said the first one dealt a serious blow to Mr. Subhash Chandra and his son Puneet because they were restrained from holding any directorships or key managerial positions in any listed entity, and they were charged with diverting funds after an interim order and an ongoing investigation. This happened in June 2023. Zee, of course, went to the Securities Appellate Tribunal, which set aside the ban on the promoters, but the investigation continued, and we heard that it is near conclusion. This happened around the time the merger was being terminated. In yet another order, in Shirpur Gold Refinery, SEBI had barred Amit Goenka, who is Subhash Chandra's other son, and 6 others from selling, disposing of, diluting their shareholding in the company. There was charge of misrepresentation and diversion of funds here too. So, point is, a brilliant entrepreneur, but always in this kind of trouble. I've written an article, there's a series of issues. Now there's a fresh report from CNBC TV18, which says SEBI has almost completed the investigation into Zee, and it is likely to accuse Puneet Goenka of siphoning off 800 to 1,000 crore. We don't know how and why this has leaked. A similar story has appeared in Economic Times. SEBI has said nothing as yet. And like I said earlier, Subhash Chandra has written to Finance Minister Nirmala Sitharaman complaining about SEBI's predetermined stand or something to that effect. Now, all these orders, even if they come, will be contested. We don't know whether there is going to be a white knight. But like I said, the quest for a white knight will be difficult. There may be more people ready to invest and be potential buyers without the baggage of the founder's legal trouble. So Sony Pictures is out, but as far as Zee is concerned, picture abhi baki hai. And we don't know what the grand climax is going to be. Will it be the end of the road for a brilliant entrepreneur who took one risk too many and whose stake is now below 4%? The bigger question for you and me as investors is, are mutual funds all that they're made out to be? Do they really understand? And can they read the corporate box office, which is what we want them to know? And why are they investing in a stock that is going steadily down, not over 1 year, not with one controversy, but over the last 4 or 5 years? You have to look at this in context. We are in a huge bull market. The number of retail investors coming into the market and the investors who put money in mutual fund has doubled or trebled in the last 2-3 years alone. What has happened to Zee? It has been constantly sliding from 600 in 2018 Jan to around 290 even before the merger, and down to about 149 yesterday. The Nifty, in the meanwhile, the same period from 2018, has doubled from 11,000 in Jan 2018 to 21,600 on 22nd Jan 2023. Mutual funds sahi hai? It's a question that you need to ask. You need to question your fund managers. You need to open your eyes, not just to a story about Zee, but ask what your mutual fund managers have been doing and which is a fund that you've invested in. If you agree, share this video and subscribe for more like this. Thank you.